All right, let's jump right in. What if I told you that one of the biggest investment stories right now has nothing to do with AI or the usual tech giants? Instead, it's all about a massive government-led push to change how 1.4 billion people spend their money. Yep, that's what's happening in China, and today we're going to break down exactly how investors are looking to play it. So for investors, the big question is always, where is the next big growth story? And the answer? Well, it might just be found in this huge shift happening right now, deep inside the world's second biggest economy. We're talking about a strategic rebalancing that's literally creating a whole new lineup of winners and, of course, losers. You see, China's facing all sorts of pressure from global trade, and it's got too much industrial capacity. So, what's the game plan? Beijing is turning its economic engine inward. They're unleashing this really powerful stimulus plan, and the goal is simple: unlock the massive spending power of their own consumers and make them the main engine for growth. And believe me, they are putting some serious cash behind this. Just look at this number, 300 billion yuan. I mean, wow. And get this, that's just for one single part of the plan for 2025. It's for a trade-in program to get people buying new stuff, cars, home appliances, you name it. So let's do what investors do best. Let's follow the money. Who really stands to benefit here?
Okay, so the first place we gotta look for potential winners are companies that have something money can't just buy, and that's deep, deep cultural roots. We're talking about businesses with an advantage that's almost impossible to shake. And you know what? It really doesn't get any more cultural than the kings of baijiu.
And this right here, this is the key to understanding why this sector is so incredibly resilient. To get the investment case, you have to realize baijiu isn't just some spirit you drink. No, it's a full-blown cultural institution. It's woven right into the fabric of everything, from sealing business deals to family celebrations. It's a huge part of social status. All right, let's talk about the undisputed king, Moutai. The bull case here is pretty straightforward. Its brand is just this legendary, impenetrable cultural force. I mean, people treat these bottles like financial assets, like liquid gold. But there's always a but, right? The bear case is all about the government cracking down on lavish spending and the fact that retail prices are falling. That could definitely tarnish that shiny liquid gold reputation. And you can see that power reflected right here in the numbers. Just look at this. Moutai's return on equity is a staggering 38.4%. That doesn't just beat the sector average, it absolutely dwarfs it. That number screams pricing power. I mean, that kind of profitability is just incredibly rare to see. So who's number two? That would be Wulangie Ebin. Now, the bull thesis for them is that they're the perfect beneficiary when people trade down. You know, you still want luxury, but maybe Moutai's prices are just too steep. The problem, though, is that they're getting hit by the industry downturn a lot more directly. They just had their first revenue decline in almost a decade, and their distributors are feeling a major profit squeeze. Okay, moving on from celebrations, let's look at another deeply culturally embedded sector, wellness. And specifically, we're talking about traditional Chinese medicine. Now, this is really interesting because it's often seen as a defensive play. Why? Because no matter what the economy is doing, people are always going to spend money on their health. So let's look at a big player here, Yunnan Baiyao. Their bull case is built on one of the most powerful moats you could possibly imagine. We're talking a government-protected, national secret formula for its products. It's literally impossible to replicate. The risk, though, and it's a big one, is that the entire healthcare sector is facing these rising anti-corruption audits and constantly shifting regulation. So as an investor, while you're trying to navigate all those risks, what do you get in return? Well, you get this, a pretty impressive dividend yield of over 6%. And in a market with this much uncertainty, a yield like that offers a very solid cushion. But hey, it's not all about ancient traditions. The next group of potential winners are what I'd call modern powerhouses. These are companies riding some really powerful new trends, where this incredible sense of national pride is fusing with a new generation of shoppers, and it's completely reshaping the entire market. And that trend has a name, Guochao, which basically means national trend. And listen, the importance of this cannot be overstated. It's this powerful wave of cultural confidence, where young consumers are actively and proudly choosing domestic brands over the big foreign giants. It has totally changed the game. And a perfect example of this is Anta Sports. They have just masterfully ridden this Guochao wave. They've used this smart multi-brand strategy to actually overtake giants like Nike and Adidas inside China. That's the bull case in a nutshell. The bear case? Well, now they're locked in this brutal, hyper-competitive home market that demands a ton of marketing money just to stay on top.
So how do investors get rewarded for sticking around through all that competition? Well, the company offers up a solid 4.7% total shareholder yield. And what's cool is how they balance it. You get a piece from a cash dividend and another piece from a share buyback program. That's a nice 1-2 punch for shareholders.
All right, finally, let's get to the most direct way to play that huge 300 billion yuan stimulus we talked about at the beginning. We're talking about the home appliance giants.
And Midea Group is sitting right in the sweet spot for this. I mean, they make everything from air conditioners to washing machines, exactly the kind of big-ticket items that trade-in program is designed to move. On top of that, they're aggressively buying back their own stock, which is a big vote of confidence. The risks? Well, as they try to grow globally, they're running into geopolitical headwinds. And back home, they're still heavily tied to the ups and downs of the property market.
Okay, so we've looked at a bunch of different opportunities here, but how do we actually judge them from an investor's point of view? More and more, it's coming down to one thing: capital discipline. Who is actually the most committed to returning cash back to their shareholders?
And check this out, this isn't just a nice-to-have anymore, it's a major policy shift. Regulators in China are now actively pushing companies to ramp up their dividends and their buybacks. The goal here is to create a more stable, yield-focused market that will attract more long-term, serious money.
Okay, so let's put it all on the table and look at the hard numbers. This is where you can see who is really walking the walk when it comes to shareholder returns. You've got Yunnan Baiyao way up there with a pure 6% dividend yield. And then look at Haier, delivering a total of 5.6% by combining both dividends and buybacks. The numbers don't lie.
So, it's pretty clear there's a big opportunity here, right? This government-led consumption drive is a huge tailwind. But we have to be realistic and look at the other side of this double-edged sword. Look, these companies are without a doubt strong domestic champions, but they're facing some very, very real pressures. You've got ongoing regulatory crackdowns at home, a shaky real estate market that's dragging on consumer confidence, rising tensions and trade barriers abroad, and just brutal domestic competition, or involution as they call it, that's squeezing profits for everyone.
And all of this brings us right back to the central question for any investor looking at this space. Are the deep cultural and financial moats these companies have? Are they actually strong enough to withstand these really serious ongoing risks? That, right there, is the multi-billion-dollar question.
So here's the bottom line. Beijing's policy has definitely picked its winners, creating a powerful tailwind for these companies we've talked about. But whether that government boost can actually translate into durable, long-term value, especially with all these major headwinds, well, that's what the market will ultimately decide. And that, folks, is the ultimate test.